Thanks for tuning into Talking Point. We've got a powerhouse talking point today. We'll try and get in multiple views around what do some of the smartest money managers think about what's happened over the weekend in terms of the election verdict, and what would they do with their portfolios or the client portfolios. Ajay Srivastava starts off, MD of Dimensions Consulting, and needs no introduction. Ajay, great having you. Thanks for taking the time out. Is this an added positive to a strong story? Is this of real big magnitude, considering it signals possible continuity, or would you not extrapolate it that far?
No, I think very clearly, I think it's a momentous occasion. Because why it's momentous is because it ran against the grain of what the television and exit poll was showing us, which means that the grassroots were thinking very differently and the drawing rooms were thinking very differently. I think that's the way I look at it at the end of the day. And I think if the grassroots are thinking in the manner they are thinking, I think it's a great positive. That's why I said the surprise is the momentum in this whole thing is that, so therefore, I think for economic activities, for a stock market, we don't like uncertainty by nature. That's one issue. Number two is, of course, the fact that this is the way we want the economy to move, in sense that now there'll be less pressure on freebies. There'll be less pressure on doing the things which are not really the best economic interest. I'm sure there are enough needy people, and what's been done is done, which is the Pradhan Mantri Grain Yojana and everything out of the way. So I think as for the PSU stocks, it's a great thing, because I think in the next 5 years of the new government, they will do a lot more stuff with the PSUs. The economic policy remains where it is. The capital goods sector will continue to outperform at the end of the day. So all the things that you have chosen for your portfolios now have a greater strength and greater resolve and continuity. There is no need to relook at your portfolio, no need to reorient yourself. I think you are on a good path and you just need to continue. For the fund managers, it's bliss, because what they bet on has come out wonders. And anybody who was careful with money on the side, etc., sure, you miss a chance to buy it cheap, but well, then you can't win all the games, can you?
Viewers, frankly, this answer actually sums up what the effect of such a decision would be. Now, this is of course presuming that what's happening over the weekend would probably mean continuity in May 2024. And like Ajay said, that independent of what political backing you have or what political thought process you have, from a market's perspective, continuity and no disruption trumps over everything else. Now, Ajay, the notes that I've read this morning are split into two. Some are saying that now that the markets may stay reasonably buoyant, even if they don't go up too much, things which have not done well, BFSI, staples, because rural is hurting, so there might be focus there, two-wheelers, etc., all of them might do well. And there is another train of thought which is saying that what you just said, that we are backing where the government has already put the money to work, and those sectors will continue to see more fund flows from global and local investors. Which side are you on?
I am very clearly on the side the fact that what's doing well at this point of time, whether it's a defense, whether it is capital goods, whether it's the railways, all those sectors will continue to perform well, because you can't switch on and off. And if the government continues, I think the money pouring into these sectors will only go up. It needn't come down. Now, whether you want to bet on a staple sector, etc., I think it's all a question of allocation of money at this point of time, the relative risk and return at this point of time, and the way the government priorities are. I would not bet on them, because simply stated, relatively speaking, why would you go bet on a sector which is struggling at this point of time? Maybe there is some value sitting there, versus something which is guaranteed. If your railways is going to spend so much money on covered security system, then you might as well buy those stocks. If infrastructure is going to be the priority, you might as well buy those stocks. If we have decided that our thermal sector is going to be the priority for India, thermal power, which is very clearly, then you go with that kind of sector. So, hanging on to the laggard may be a good value strategy, but we believe that momentum investing is far superior in India. Sure, value can pick up over time, 3 years, 5 years, 7 years, or whatever time it takes. You saw how long it took for ITC to re-rate, right? Technically, ITC re-rated at some point, but it took him a decade to re-rate. So if you have the luxury to wait, I think you can. But if you are in a market to compete on returns and superior to debt returns, that's a more important one, because the debt cost, if you look at it, even if interest rate falls, we are looking at an average about 13% return on a gilt fund by the next year or so. So you're competing against a 12 to 13% gilt fund return expected versus an equity which should be 20-25%. Now, whether it will come out of value, it's a thought, but I would doubt it. I would rather bet on momentum than the value sector.
Got it. Ajay, one final word. Since you mentioned power, I'm interested. While there is this whole move towards green, we know now that there's been some talk of companies being spoken to for investing in thermal as well, traditional power, simply because we might be running out of power as well. My question to you is, that side, which is the thermal power companies, are not necessarily most primed for growth. They're probably in the value zone. Versus that, the green energy, renewable power, wind power, etc., the companies have thrived in the last 12 months. Within that bucket, are you choosing value or are you choosing growth?
No, I think, luckily in India, you have companies which are straddling both sides. I'm not saying to buy, take example, Tata Power. It has equal amount of stuff in thermal power, it has equal amount of stuff in renewable power. So we are actually have a good choice, unlike America, where there's companies divided in the lot. And in fact, companies focused purely on renewable powers have had a very difficult time in the last 1.5, 2 years, at least on the stock market. You've seen some of these things, the Inox, wind, etc. They had a troubled existence on the stock market. So we are lucky that the big companies in India, whether it is the NTPC, whether it is the Tata Power, whether it is Adani Power, let's say the three big ones, or JSW Power, all the four big ones are straddling both the sectors. So I don't think we have a worry to say which side are we batting on. I think one side we are batting on is India will need solid power. And now the government has taken a decisive stand on thermal power. Therefore, there is clarity of investors to say next 5 years or so, you can bet on thermal power companies without the worry of a tax or a green tax coming on them. So I think it's a great momentum. And on the other hand, with the expansion of Coal India, the coal mining, which has also been part of the government policy just now in this environment thing, I think even that is assured, because one time the green lobby was supposed to overrun and shut all the coal mines. So therefore, how would thermal power run? I think that's this stand government has taken just now in the environment summit is decisive for the investors. The thermal is here to stay. Renewable has a role to play, and coal supply will be guaranteed in a large way. So the whole sector, in fact, now breathes a sigh of relief and says, with the government yesterday's result, that policy continues now. The green lobby cannot come and overwhelm the thermal power sector. Therefore, your fortunes in power companies stand assured.
Got it. Well, we get in Abhay Agarwal, founder of Piper Serica, into the conversation as well. But my final question, and Abhay, thank you so much for joining in. But my final question to Ajay before we let Ajay go. Ajay, in my mind, therefore, from your perspective, this verdict changes nothing. Your top bets would be the ones that you already betted on. I laid a bet on.
That's one. What has changed is we have, I think, now reinvested back into the wealth management sector, because that's going to get the next big fill up. If the equity markets remain buoyant, the sector has done well. So that's one big sector that we think we want to invest back in, because if this continues, the wealth management sector is going to give phenomenal returns to shareholders. So that's one big sector we added up.
Well, thank you so much for that, Ajay. Much appreciate you taking the time out and joining in. Well, let's continue this conversation with Abhay Agarwal of Piper Serica. Abhay, great having you. Thank you so much for taking the time out. And Abhay, अब की बार 21,000, अब की बार 23,000, या let's temper the enthusiasm. It's great news, but valuations also matter.
Yeah, no, you're right. This is, I don't think. See, what is happening is that nobody, frankly, expected this kind of decisive victory for the BJP government, and I think state elections do not really matter to fund managers and portfolio investors because they are fought largely on state matters, Neeraj, and not really national issues. But this state elections came so close to the union elections next year that there is a thesis that what the decisive victory has shown is a clear path to probably a victory in 24. So I think the market that was either short on expectation of election results, where it was probably 2-0 with some nervousness around it, I think all that is passé now. That's history. So clearly the message that the markets have got is, look, the policy reforms that were going on, the digital and physical infrastructure that was being built, the tax policies that were under play, they will not only continue because they have been voted in favor of, but they may actually pick up. So I think the market likes that kind of continuity. As fund managers, we like that kind of continuity of policy because that policy continuation impacts earnings, and earnings are what drives market. So right now, Neeraj, clearly the sentiment is that the policy direction will continue, brings in a lot of predictability of earnings. So the bets that were already made in infrastructure, in public sector companies will continue. And I also think new sectors will emerge because there are sectors that the government has been talking about, but policy initiatives haven't yet followed through. Now I think it will have the confidence of pushing those reforms also. So I think all in all good, very difficult to call the technical levels, Neeraj, highly sentiment and flow driven. You never know, they turn on a dime also. But I think the markets will probably ignore the stretched valuations in the shorter term. And the longer term investors will try to find spots where they can still deploy capital and valuations are not stretched.
You are a longer term investor. Are you finding pockets where valuations are not stretched, or are you of the belief, Abhay, and I mean, 1,000 ways to skin a cat, that there are themes which are working so well with the backing of where the government has shown that it wants to back those themes, railways, PLI schemes, so on and so forth, that might as well bet your money's there?
No, I think the existing themes are where the valuations are stretched because of a lot of momentum money coming in, and very difficult again to call the top there, that when will it top out, because there is definitely money that was not deployed that is going to chase some of them. But I think for prudent investors, there are opportunities outside that. I've been saying that the valuation divergence between large caps and small and mid caps has become quite stark. Some of it is probably justified because the smaller and mid-cap stocks companies have shown faster growth and are larger beneficiaries of policy initiatives. But purely from an investment point of view, I would say that we will start seeing a shift of money, new money to larger caps. And I wouldn't call them laggard sectors, but just good companies that haven't seen any market cap expansion over the last 2-3 years. I think investors will start looking at them in the large cap space overall, and also try to find new sectors that they can bet on over the next, with a 2 to 3 year perspective.
Got it. I would love to understand what have you done in the last few days while you were sitting on the little bit of cash to take advantage. But just one quick question, Abhay, before that. When I'm looking at the screen today, there is this big move or big jumps that have come into the Adani Group stocks. So read infra. I was looking at Inox Wind Energy, some of the other Suzlons, etc. of the world. So the green energy that the government is talking about, there is a bit of a beeline there. And cement is certainly finding favor, maybe because of the deals that have happened recently, but also that the sector doesn't seem to be egregiously overvalued. I'm just trying to understand. The screen today is certainly rewarding the themes that has the backing of the incumbent government.
Absolutely, and that is expected, Neeraj, because with such a massive majority, you win, and I would say most of the analysts were baking in a 2-state victory, but then you have a 3-state decisive victory. So come Monday morning, and the first thing people do is to look for, if they're under allocated, look for building allocation in themes that at a very intuitive level expected to play out. So I'm not surprised at all. In fact, I think this run up will probably continue. I think Adani stocks anyway are coming off the whole Hindenburg issue, and people are now looking beyond that, focusing on the core earnings. The guidance on the ports data, the tonnage is very positive. So, and cement stocks also, as you mentioned, and some of the other core infrastructure builders, I think capital growth will see a pickup. So I think these will continue to play out. But at some point of time, I think once people believe that, look, these are now at a level where you need to look at other companies, I think that's when you will see a widening of this rally also, where some of the sectors that have not participated will participate.
In some fashion, Abhay, it could be narrowing down of the rally, because in India, unlike the US, we've had a mid caps and small caps do well, but those, that Ritik stocks, the HDFC, Kotak, Infosys, etc., just haven't participated. So, what have you done with your monies, Abhay? I mean, would you deploy it completely? If not already, part one, and if not, are you looking to maybe deploy it into some of these large caps which haven't moved thus far?
So as we have had a defensive portfolio strategy for the last couple of months, and what we did is we took off some money from mid and small cap and redeployed it over the last month and towards the end of the month, faster pace, into the large caps that we like. And none of these are buy recommendations, Neeraj, but these are our portfolio stocks. So we added to companies like Reliance, Kotak, and we are pretty bullish now on the agrochemical space, crop protection especially. So we have added names like Bhaiya, UPL, Dhanuka there, which is a mix of mid and large caps. So that's what we have been busy doing, Neeraj. Our cash from 25% in the portfolio is down to about 12% now. And we are still seeing good opportunities in the large caps. So, we do plan to deploy some of those funds into the larger caps. We're not really worried about 1 or 2 or 3 or 5% moves, because the perspective is a 5-year perspective. So if we see value, we will definitely deploy.
Yeah, I think somebody who kind of invests with probably that same train of thought is also joining in on this conversation. Siddhartha, Bhaiya, MD of Equitas Investment Consultancy, also with us. Abhay, stay on. I'll just get in Siddhartha for a conversation and then take a final question with you as well, because somehow I think your answers make me believe that both of you kind of thinking on those similar trains of thought. Siddhartha, thank you for taking the time out and joining us. And just trying to understand, Siddhartha, momentum is in favor of equities. And I was asking Abhay that this morning when I was looking at the notes, there are 2 trains of thought. One which is saying we are backing the sectors and the themes when the government has already put in the money to work. So even if they are stretched, order flows and earnings will ensure that the valuations look reasonable 2 years out. And the other train of thought is we are wanting to bet, now that the equities will stay okay, we are wanting to bet on the ones which haven't made a move thus far. How are you thinking about it this morning, now that we have a near certainty on what could happen in 2024, at least in the minds of the market?
I think good morning, Neeraj. Very good morning.
Very, very good morning, Abhay. Very, very good morning, Siddhartha.
I think so. The election results have been very, very positive. Okay. It tells you that, the government is, or rather the population has voted in favor of development and growth rather than in favor of caste politics. Right? So that's a big positive. I think the sectors which have been doing well over the last couple of years will continue to do well.
Okay.
Right. So I think the impetus on infrastructure, there will be continuity as far as the government is concerned. So there's going to be impetus on infrastructure. That sector will continue to do well. The biggest concern going into the last couple of months, the biggest concern was, Neeraj, that will the Modi government come back to power? I think with the elections yesterday, a lot of those concerns have been laid to rest. Right. Yeah. And we've been seeing last 2-3 years a big impetus as far as infrastructure is concerned. And now with 224 looks like a done deal. So you're going to see a lot more, you're confident as far as the infrastructure growth story is concerned. Once there is, typically we've seen in the past with Telangana and Andhra Pradesh that when there was a change in government, a lot of projects got stalled. So that's unlikely to happen. That was the biggest concern. So we've discussed in the past that money is going to flow to the infrastructure. It is, the last decade was all about bank credit flowing to the consumer. The last 3 years has been bank credit flowing to the industry and the infrastructure and the cap goods sector. And I think that trend will continue. That's the good part, that, the vote has been in favor of development, has been rather over, caste-based politics. So that's a big development as far as I am concerned. So going forward, the concern was that what if the BJP loses these elections and they get into a populist mood going into election? So the country is voted in favor of development over caste-based politics. Everybody is doing well.
Yeah.
The bad news is that the valuations are not it.
Yeah, they aren't, and I think that is what Abhay Agarwal is referring to as well. But Abhay, just signing off with you, but just with this one question, I think Siddharth makes this important point. Even independent of what happens over the next 5 years, and of course we'll get to know that. But the fact that this verdict that has come over the weekend would probably give some shot in the arm to the BJP to not be overly populist, if you will. They might have to be because rural is hurting, but not be overly populist, because we are at 45% of the fisc. We're still trending well despite the expenses and the investments that have been promised and done already. Is that a big shot in the arm for the next 6 months as well?
Definitely, Neeraj, and I don't think anybody can blame BJP for being populist. I mean, they were not the ones who were handing out freebies even in the state elections. In state election results have shown that the electorate is now looking way beyond these freebies and saying, look, I'm not begging for freebies. Give me job, give me growth, give me money on the table that I earn. I don't want your freebies. And anyway, I don't trust that you will give me those freebies when you're elected. So you look at the BJP government, they have increased income levels at farm levels through Manrega, increasing the MSP, and those are the right way of inclusive growth, if I may say so. And I think now BJP has all the freedom to do more of the same. I think the focus will now be on increasing the farm income, and that's what they have said regularly over the last 6 months, that they want farm income to double. They want frictionless credit to farmers. So I think that is one big impetus that we will see over the next 6 months. And all in all, I think it's very good for the country's growth. We are looking at 5, 10, 15, 20 years growth where you have these, mid cap, small caps become 20 baggers, 50 baggers. I think the environment is very positive for that. And I think BJP has everything going for it now to continue to do the right things that they have been doing, and the markets will reward that.
Got it. Okay. Abhay, we'll leave you at that. Thank you so much for taking the time out. And of course, we'll see you on the channel launch on the 8th. So looking forward to that. So thanks for that. Okay. Siddharth, now, they come in, would love to pick your brains around how would you believe within the investing landscape that you've laid out for us beautifully in the past few months, and you just mentioned in your opening answer as well, how do you think large investor money thinks? Because there is also a train of thought which says that, let's say, foreign institutional investors were sitting on the sidelines. They might have been a bit nervous about what could happen in 2024. I mean, Chris Wood also mentioned in his note, for example, and some others have also said that they are really watching out for these elections. Does this make some of the slightly more non-risk averse global investors to preempt what could happen and come into the Indian markets? And therefore, is that a shot in the arm for the large caps? Because traditionally, FIs will come first into the large caps.
See, to be honest with you, Neeraj, I've been traveling extensively over the last 4 or 5 years, meeting global investors. Right, 4 years back, 5 years back, nobody was even interested in India. They're all invested in NASDAQ. 3 years back, they started warming up to the idea that, okay, we might want to hear the India story. Today, for most of the global investors, India is just part of the emerging markets, but they're actively looking at India as an investing destination. They're still on the sidelines. See, money, whether it is global institutional money or this, will come in at the top. So yes, as we speak, we have somebody from US sitting in our office right now, and they are actively looking at India. So I think I was just telling him that what I feel NASDAQ had a wonderful rally from 2010 to 2020. And I feel in NASDAQ terms, probably we are in 3 or 4 years. Correct? So global money flow to India is going to come. India is one of the few sweet spots left in the world. You don't have growth in the Euro region. China is in a mess. US is doing well, but nothing like what. So where is growth coming in? It is coming in India. So money eventually will chase growth. So I think FI money will come in, right? It'll come into large caps. But even in large caps, if you look at Neeraj, what are the large caps which are doing well? It is not the stocks which are over-owned. It is the Coal India, it is the NTPC, it is the ITC, it is the Larsen and Toubro. which are doing well. None of your Ritik stocks are doing well,
That's
right?
true.
Because they were expensive. Although some of those stocks have now started looking attractive on valuation terms. But will they, reversion to mean does not necessarily involve that you buy the stocks at mean, because if they were overvalued, then probably they'll also get undervalued. And that's how you get a mean.
Yeah, no, that's a valid point too. So this is this whole argument, right, Siddharth, that some of those will now come to the fore, because if the markets had to rally further from here, at some point of time, banks have to participate. They're such a large weightage, and they haven't thus far. Last 6 months, Bank Nifty's done practically nothing. Do you think
Yes.
banks come to the party, or is it difficult call to make?
As I said, last 6 months, the small cap, mid cap index has gone up 40%. The Bank Nifty has delivered negative returns. And that was our call. Our call was that, look, the valuations over there were very
Yes.
expensive, right? But what typically happens in a bull market is stocks which tend to do well continue to do well. So it is very likely that your PSUs, it is your NTPCs, it is your Coal India, it is your Larsen and Toubro, which will continue to do well, because these are under-owned stocks. You might have newer stocks coming into the Nifty. You have stocks like PFC, REC, which are knocking on the doors as far as valuations are concerned, and even in terms of the way their market caps have increased. So my sense is, banks, yes, something like an HDFC Bank and current valuation looks very, very attractive. ICICI Bank, Axis Bank, they're all at 15 times earnings. Whether they will re-rate or whether they will do well, only time will tell.
Got it. So that, forgive me for being presumptive here, but whatever little I know of your investing style is buying value and then riding it till almost the last drop of the juice is out of the way. If you can, nobody can time really, but let's assume that's the style, right? My question to you is, do you believe that there is, in your mind, for new money coming in, a need to look at newer pockets? Or are you more comfortable putting money in stocks which may have rallied a bit, but where you believe the cycle is still going to last for the next 3, 4, 5 years? Especially, they might be even in pockets where the government has put its might behind and said that we are going to fund the capex even if the private sector doesn't come.
See, Neeraj, this is not going to be a one-way street. There are going to be hiccups along the way. As of now, everything is hunky-dory, as I said. You look at the GST numbers, you look at factory output, you look at PMI, you look at income tax collections, everything is good. The only thing that is not good is valuations. And at the end of the day, if you don't buy with enough margin of safety, you don't leave any room for error, which is what we saw with Ritik stocks, right? Everything was hunky-dory for them at that point in time, but there was no room for error. And so for me, valuations are paramount. And at this point in time, I see comparatively little opportunities as what we saw 3-4 years down the line. So deploying new money is a challenge, to be honest with you.
So would you as well? I know timing the market is not the best time, but that's where expertise of money managers like you comes into play, because you've got the experience and the expertise. Would you tactically wait for better opportunities currently?
So we are practically fully invested, Neeraj. We are very selective about taking new money. In fact, in our PMS, we have 15 accounts which have been opened and we have not called for the money, because we have certain parameters as far as return expectations are concerned, right? And if we can't make those returns, then there's no point for calling for client money. So if we get a correction, fine. If you don't get a correction, you will wait for it. We'll wait for it, at some point in time, or we will enjoy what we already have.
That's true. Okay, Siddharth, just one last question. Since it seems such a hunky-dory time, it's always good to talk of the potential risks, if any, for the next 6 to 12 to 18 months, to your mind. Is it global in nature? Is it local in nature?
I think, majority of the global risks, we've kind of, swept by the side. If I've told you that you're going to have Russia-Ukraine war, you're going to have Israel this, and where do you see the Nifty and interest rates hike? And we probably would have said Nifty is likely to stay flat or go down, and we've been roaring. So one area that I would look at is the liquidity, the systemic liquidity. Last 4 years, 5 years, or rather last 3.5 years, we've seen surplus liquidity in the system. And in the last 15 days, we've seen liquidity getting into deficit for the first time after a very long period of time. So I would want to keep an eye on that, particularly with the elections coming in. So we know during election times, money does go out of circulation for various reasons. So that is something that could, kind of this, because you can't have such high growth rates and not have an impact on liquidity. Credit demand is very strong. So let's see, that's kind of one area that I would look for. And I'm someone who's always looking for risks. So yeah, that's one area that is what I'm looking. And then the valuations. Look, the small cap index today, Neeraj, is at 30p multiple on a trailing basis. 3.5 times price to book. It is more expensive than the Nifty. Nifty is at 22 times earnings.
Yeah.
So, and it's crazy what's happening. Then the supply of paper, IPOs, QIPs, that could take the liquidity out of the markets. So, yeah.
Point well taken, Siddharth. Thank you so much for such rational thoughts. It's good to have such voices on a day when the market might be looking at exuberance. So much appreciate you taking the time out. See you on the 8th when we launch the television channel.
Yes, looking forward to the new launch.
Thank you so much, Siddharth, and thank you for joining us today. And viewers, thanks for tuning in to this slightly differentiated edition of The Talking Point.